The coronavirus pandemic has brought untold suffering to millions across the world, but the long-term damages it'll leave on the global economy is only just starting to show. One consequence of this uncertainty has been the explosion in popularity of cryptocurrencies, leading the charges Bitcoin, which has seen its value shoot up throughout the pandemic. But that amazing ride has come at a cost for many investors. The sharp rise of Bitcoin and other cryptocurrencies has seen an explosion in exchanges and trading companies. But now that boom could be about to slow down, at least in Turkey. Two cryptocurrency exchanges collapsed in the country just days apart as regulators started a crackdown on the industry. Thousands of Turkish investors have been left unable to access millions in digital currencies. One of the exchanges went offline after its CEO reportedly fled the country with $2 billion of investors' funds. Cryptocurrencies have proved popular in Turkey as people look to hedge against inflation. But with that popularity has come risks and fraudulent behavior. And although Turkish regulators have started clamping down, for many investors it's not clear if that will be enough. And to discuss that, joining me now from Istanbul is Turan Sert. He is a researcher and an advisor to the Blockchain Istanbul Center. And from London, Daniele Bianchi. He is an associate professor of finance at Queen Mary University of London. Gentlemen, welcome to Straight Talk. It's good to have you on the program. Turan, why are Turkish investors drawn to cryptocurrencies and why they have switched their investments to cryptocurrencies rather than other assets?
Well, as you said, I think the main thing with the Turkish investors, this is actually an emerging market issue, right? Mm-hmm. In all emerging markets, the devaluation of the currencies and the fluctuation has resulted in many for many investors. They became very sensitive to what's going on in the world and what's going on economically. Mm-hmm. So what they have done is like they're looking at different investment alternatives, and cryptocurrencies, just like anything else, is an alternative asset for them.
Mm-hmm. So Daniel, could you talk to us about how has this pandemic impacted the cryptocurrency investors all around the world?
Well, it seems that impacted positively the amount of money that is coming into the marketplace, and there could be a variety of reasons. One could be the fact that a large chunk of investors is expecting high inflation in the next 2-3 years, and in fact, there are signs that this is going to happen, particularly in the US. And if you believe that Bitcoin is a hedge against inflation, then that naturally explains why the pandemic could be a positive event for cryptocurrencies. Someone else could say that is also because of the stimulus that effectively put more money in the pocket of retail investors, which is the big chunk of investors when it comes to cryptocurrencies. So we should recall that the vast majority of investors are actually retail investors and not institutional. Mm. So there is a variety of reasons why the pandemic could be thought as a positive event for cryptocurrency.
Yeah, Turan, some people seem confused about this cryptocurrency. Is it a safe tool for investment? What kind of a risk do these cryptocurrency platforms or trading platforms pose for investors?
Well, Ayşe, let me tell you, it is definitely a risky investment. I mean, I have been dealing with crypto for a long time, but for a variety of reasons. I mean, cryptocurrencies give people financially a freedom, but it is also gives a lot of responsibility alongside that freedom. So the risks there are quite different. There are like technological risks, mm-hmm. and there are also risks related to regulatory issues, because these cryptocurrencies are mostly not regulated by financial authorities. So the risks are quite large compared to other type of investments, I must say.
So speaking of risks, Daniel, is a common international framework or a law needed to protect investors? Could, for example, all countries get together to regulate it globally? And what are the challenges before that?
Well, definitely there needs to be regulation, in particular to protecting retail investors, because those are the most vulnerable. I'm not particularly worried about hedge fund managers. What I'm worried about is the guy on the street that spends his retirement money on Bitcoin. That's the guy we should protect. When it comes to regulation, I think there is a huge challenge, which is putting together different countries, right? Because some countries might actually benefit from having such type of speculation. Some country might not. And when it comes to a global approach, that makes everything more difficult. So I kind of find hard to believe that at least in the short term, that there is a global approach. I think is more scattered across different countries having different regulation.
So what do you think, Turan? The governments are skeptical about this new investment platform and want to either regulate it or even ban it. Could it be banned, by the way?
Technically, it is not possible to ban cryptocurrencies. What could be done is for governments, they may actually prohibit their citizens to use cryptocurrency exchanges, which is right now the bridge from the physical world, the world that we live in now with the traditional finance, and the crypto world, that space out there. There's a bridge between them, and these bridges are cryptocurrency exchanges. Governments would possibly, if they would like to, actually prohibit cryptocurrency exchanges and prohibit the buy and sell of the cryptocurrencies. But banning cryptocurrencies itself is technically not possible, at least for most of the cryptocurrencies.
So banning is impossible, it seems. But Daniel, how can something be regulated if its purpose was not to be regulated?
That's a very good question. So every regulation is against the spirit of cryptocurrency in the first place. If you see the value proposition in Bitcoin, which actually is born right after the financial crisis in 28, was exactly the value proposition was exactly be your own bank. We cannot trust central banks and the likes. So regulating crypto is going to be a real challenge, and you definitely need a global approach. And on the other hand, we should keep in mind that regulation, you don't want to kill that type of industry because there are good things and bad things about cryptocurrencies. So you don't want to kill the good things through excessive regulation, right? So taking a balanced approach when it comes to regulation and such a complex phenomenon such as cryptocurrency, it's not going to be an easy challenge.
Okay. So from a Turkish perspective, Turan, the Turkish Central Bank has already banned the use of digital assets for payments. Then it decided to add digital currency trading platforms to the list of companies that will come under the nation's anti-money laundering and terrorism financing regulations. What's your take on that? Would it be enough? Do you think it will scare the investors away?
No, I think, listen, so far, the blockchain technologies and cryptocurrencies, it's a new technology. It's a growing technology. So governments, they decided to follow the wait and see policy so far. But right now we have been seeing governments, slowly but surely taking actions, and I think Turkish government, in that sense, has started that. So I believe this regulation from the Central Bank of Turkey is, and the follow-up regulations from the money laundering agency, financial crimes agency. These are one of the many steps that I think are planned by the government. So I think we will continue to see that going forward. Right now, I think each and every regulatory part of the government, the authorities, are dealing with whatever the institutions that are going under their own jurisdiction. So I think they are following a phased approach at the moment. But recent events that happened in Turkey regarding to certain cryptocurrency exchanges may change the situation going forward.
So, Daniel, how could placing harsh restrictions impact this technology and the blockchain ecosystem? And are cryptocurrencies and the blockchains two separate tools, or they come hand in hand?
Well, to some extent, you can think about the cryptocurrencies as blockchain has been interlinked. One is actually built on the other. Although we have to separate Bitcoin and some of the more speculative assets, if you wish, and some other which has to deal with different aspects of daily lives. For instance, the internet. Now we talk about the 3.0 internet platforms. The way we transfer data in a completely private way. So there are aspects of the blockchain which do not necessarily overlap with Bitcoin. Now, adopting an approach which is too strict in that sense could actually kill that good side of the industry. So when it comes to having a too harsh approach, I'm a bit skeptical because, as I said, you don't want to kill the baby in the early stages, right? Perhaps you want to regulate the more tricky aspect, which is effectively retail investors at the end. So we want to protect retail investors. We don't want to kill the industry, which has some good value, I think.
So, Turan, last question. Before investing, how could an investor be informed whether that tool is safe or not? Is there any, for example, criteria to become a cryptocurrency trader?
No, unfortunately not. And as this is a very in early stages of the growth, so it's really difficult to tell what is the right way to approach. But there is a saying in cryptocurrency industry: do your own research, DYOR. So I think that's the critical thing. Everyone, I mean, as cryptocurrencies is bringing individuals' financial freedom, it brings its own responsibilities, and that means people should do their own research as much as they can before trading. Otherwise, just hearing something from someone and just with word of mouth doing things, investing would most likely bring unfortunate results.
All right, gentlemen. Unfortunately, we'll have to leave it here. Thank you very much for joining us on Straight Talk.